morning, ladies and gentlemen. It is once again I, Lord IBO RICHARDS. You're watching CORP Exchange Television, and this is a segment on HEJSPAN, which we're creating a station for hedge funds. No advertising, just strictly information. So you're watching CORP Exchange Television, and this is HEJSPAN, and again, this is Lord IBO RICHARDS. So the name of this segment is called Decisions. And for those of you who don't know, HEJSPAN is a global network of hedge funds. You know, we research, we consult with hedge funds. We get a lot of information on how hedge funds work. And we start our own hedge funds. We help people launch hedge funds. Hedge funds are fun. So, you know, you're looking at the capacity of the hedge funds, and this is just according to Corp Exchange and Engage Research, which is a big partner sponsor in the hedge fund business that we do. So a major factor with hedge funds is interest rates. You know, you get your 2%, a decent funds, 500 million. Liquidity, assets are important. Risk management is always associated with the downside of whatever you're investing in, whether it be stock markets, bonds, pig farms, high yield dividend stocks. So we call it a behavioral finance. Volatility is used to gauge the risk, and you're always comparing yourself with competition, because in the finance business and the hedge funds, you're not your own competition. You see what I'm saying? The other funds it is very, very competitive. It's not like self-betterment where, you know, the new religion where everybody's like, hey, I can make you better with your relationships and with your, you know, you're your own competition, not in this business. So, you know, you're always looking at your view of loss. You know, most of the time, no matter what you're in, it's in a factor. The factor is a passive, long, short, biased, alpha versus beta, systemic risk, and you have to always have market timing, which you can alternate. You know, it can be alternative market timing. You can leg in, leg out. You have to associate the risk plus the premiums, what you're charging and what you're hedging to leverage the types of risk. You know, you have convergence, you know, commodity, complexity, short vega, liquidity risk, term risk, small cap, value stock, credit, EMA, and equity, just amongst other things, just to name a few. The hypothesis of the beta is the return of on the fund, you know, of the rate of return on your fund. Not the rate of investment, the rate of return. So risk and restriction is also always played into the factor of the hedge fund. You know, you got the risk associated with it, and, you know, there's a lot of restrictions and things you can't do, even though it's more open than other funds like mutual funds and stocks and managers like that. You still have to watch out for the restrictions, and you have to learn that, because that's what it is in your region, your state, your country. It varies it varies. You want your models to be transparent, and I teach, you know, simplicity. It always works best in a hedge fund. Attracting value in the broad-based markets is always a plus. And the U.S., you know, overweighting in the U.S. market, I really don't see anything wrong with that, because people say, you know, don't over leverage, but you can overweight. I would say you would overweight in the U.S. market, because every time it goes down, you know, the U.S. economy spends a lot of money inflating and boosting up its companies and stimulating and bailing out. So it's not really a bad idea to say, well, I can take a portion and just overweight in whatever in the U.S. market, because the United States of America, you know, is too big to fail. You know, they talk about their banks, their regional banks are too big to fail. The economy in general is just too big to fail. So if you're really looking at it, unless you're looking at, I don't know, the existence of I don't know, Roman Empire, Mayas, Incas, whatever you call it, civilizations, Egyptians that aren't here anymore, you're thinking really, really big, you know, biblical proportions, not to bring faith base into it, but you're just thinking way outside the box right now. The U.S. economy on this planet is too big to fail. So if you're overweight in the U.S., you say, well, we have to cut back and take 10 million off. I would put 10 more million in, you know, just to get the 3%, the 3 to 30%. Structural economic change is what you have to be aware of in the U.S. economy. But then again, you know, if you're overweight, not over leveraged, you shouldn't have a problem, because when you're overweight, the stock market goes down, it gives you a buying opportunity. If you're over leveraged and the market goes against you, you have to really come up with more money to cover that, to please your investors so you don't get into a bad, very bad situation. The question is, the world is becoming more and more globalized than, let's say, 25 years ago. And the macro brings uncertainty. As on a global level, as the global levels of investments is being exploited through the growing of emerging markets, and it doesn't tell you where to invest. But when you're talking about we got a few more minutes here. When you're talking about the emerging markets, people have to be aware, you know, of what's going on outside of the U.S. economy. People think when you go to Africa, you know, there's a bunch of bush boogies running around, or when you go to Europe, you go to Latin America, they're still using latrines. You know, you go to Europe and there's no electricity in parts of Russia. You know, you really got to find out what's going on out there in certain parts of the world, because there's some very, very wealthy countries, and these countries are on the bubble. You know, they're not kicking the can down the road. They're not punting. They're not tabling things. They're really consolidating and getting together and growing. They might not have the size or the capacity or the population, but the wealth is very, very increasing, and you have to respect that in finance. You're watching CORP Exchange Television. My name is Lord IBO RICHARDS, and this is HEJSPAN, a member of CORP Exchange in good standings. Thank you, and have a very, very blessed day. Goodbye.